Okay, and then go back to sharing my screen. I'm recording it because we're doing some promotion, so I'm going to put this video out. So I'm going to be doing this really step by step, basic, one step at a time. So if you've done it before, just bear with me. So we're looking at a 15-minute chart, and the first thing I need to point out is that there's a vertical blue dashed horizontal, a vertical blue dashed line there, which marks the end of the of yesterday's trading session and the start of today's session. If I just hover on the last candle before the blue line, you see it says 21.45 down the bottom. That's a 15-minute candle, and that candle would have closed at 10 p.m. last night, UK time. And then if I go to the next candle, that's 11 o'clock. So there's actually a 1 hour gap. Now that doesn't apply to Forex pairs, but it does apply to things like gold. So the market closes at 10 p.m. and reopens again at 11. So that's the first thing I want to point out. We're looking at gold, and there are some significant differences between Forex pairs and gold. Now, I did forget to say, by the way, I'm not licensed to give financial advice. I'm just one of the ninjas, in one of the ninja group, just trying to help other people to be successful in trading. So any trades that you do take, you should do your own analysis before doing so. Second thing I need to do in terms of due diligence is look at the news, and we were just saying at the beginning there that it was a fairly quiet morning on Crossfire this morning. There were some pips to be had, but there's a really good reason why things are a little bit quiet today, and that's down at the bottom here. You've got the federal funds rate, which is basically the United States interest rate announcement at 7 p.m. tonight. So really high impact news. They are expecting to increase the interest rate from, I believe it's currently 1.75, and the expectation is that it's going up to 2.5%. So that is the biggest impact news today. There's quite a lot of US news at 1:30 as well. Not high impact, but medium impact and low impact. And there's also some significant European news this morning. So quite a bit going on, but mainly this bunch of things at the bottom is affecting the markets today. Economic calendar, they've got a bit more detail on that. They're saying, where are we? So this is where we are now. So little bits and pieces of European news this morning. Some US news, quite a lot of US items at 12 lunchtime, 12 noon UK time. There's some high impact news at 1:30 in the States. Quite a few items there. All of these low and medium impact news all ganging up today to influence the price. And then, of course, they've got the interest rate, which, as I say, is expected to rise to 2.5%. I would suggest that is probably going to strengthen the US dollar when that announcement is made. But either way, we need to be aware. I think the main impact on today's trading is going to be, there's not going to be a lot of movement until that interest rate decision is made. However, we'll continue.
Any idea what it might do, Richard? I mean, you've got experience of these things, and
well, I think the main the way I look at news is I don't worry so much what the news is. I bear in mind that the big institutions use the news as an excuse to manipulate price. So they use it as a smokescreen to do what they want to do anyway. So there will be some price movement hidden behind the excuse of the news. So it's hard to say what the impact will be. It'll be what the institutions want it to be.
Yeah.
Initially, there'll be, I guess, the US dollar will strengthen, but how long that will last remains to be seen. But I only take news into account in that it provides the institutions with an excuse to manipulate price.
Yeah.
So that's my take on it anyway. So what we do on the when we're looking at volume profile, and I specialize in gold, so I'm looking at gold, but you can use this strategy on Forex pairs as well. I am reliably informed. So the first thing that we do is we look at yesterday's trading. So this is today's trading on the right-hand side of the blue line, and this is yesterday's trading. What I normally do is I look first of all at the big picture. So if I go to the 1 hour time frame, that's showing me that we're currently in a period of consolidation. Price is not moving very far, although in real terms, those are quite big candles, and there's quite a few pips involved. But basically, we're in this consolidation. We have been since this big price rise on the 21st. And even prior to that, there was a lot of consolidation in this area here. And you can keep on scrolling back and you see that this is a big area of consolidation. There's been a big leap up there, and then you're back into an area of consolidation. So price spends most of its time in consolidation. If you look at the daily chart, you get an even better picture. I'm just going to try and condense that for you, just to give you a picture of where we are in relation to where price has been. And this is going back now to 2017. So this is sort of 5 years all in one screen. You can see that price went up. It reached a peak on August the 6th, 2020. It reached another peak at the 4th of March 2022, and basically since that date it's been in decline. That was about 2075, I seem to remember, 2068, 2069, near enough. But can you see, just as a matter of coincidence, can you see how that line joins up those two peaks almost perfectly? So that at some point has been a really strong resistance point. Prices failed to get any higher than that, even in the last 5 years. So that has been a significant point. And then if you look down here, there are significant points below that point where we were yesterday, I think it was, or the day before. We reached a low there. It's certainly in the recent past. But look at these other peaks, if that's the right word, low points. That line joins them all up. There's another one there, look, and that, at that point it was acting as a ceiling, and here it's acting as a floor. So there's some clues there as to where price might go. I'm going to go back to the 15-minute chart and try and reset it so that we can go in closer. Right, so there we are. So that point there, where you see how that low point there matches that low point there from yesterday. So that's a significant point to bear in mind. And if you go back, you'll see that point has been touched several times in the recent past. Okay, so let me add something to the screen. If you are using a free version of TradingView, you can still use this volume profile strategy. What you need to do is, if you look where my cursor is now in the left-hand channel, count down 1, 2, 3, 4, 5, 6, 7. That icon there, if you hover over the arrow, it says prediction and measurement tools. If you click on that, you get a drop-down menu, and right down at the bottom, there's a fixed range volume profile. Now, if you were to click on that, which I'm not going to do, you'll get, I'm not going to do, basically because I've already got it in my favorites here. So fixed range volume profile down at the bottom here. I'm going to click on that. And looking at yesterday's trading, I'm going to go either above or below the first candle of the day, which is the 11 p.m. candle there. And then I can go anywhere. It doesn't matter how high or low I am on this, so long as I'm above the last candle of the day, which is a 21.45. So that's covering the entire day's trading yesterday. And then if I click on that, it gives me the volume profile for yesterday. And what I see when I look at that is this is a real peak, and there is basically what that's telling me is that the peak in interest, in other words, where all the trades were placed yesterday, this is the absolute peak of interest. So that price there, which was 1719.105, that was where most of the orders were placed yesterday. So that's buy orders, sell orders, stop losses, pending orders, the whole lot thrown into one. That was the point at which there was the most price interest. These two blue lines define 70% of all the trades that were placed yesterday. And that is where the strategy gets its name. We call it the V70, which is 70%. We call that the value area, and that's because there are 70% of all the trades were focused in that area there. Outside of those blue lines, you've got the other 30%, and that occurs below and above the blue lines. If you take, if you were to look, what we will do, in a minute, we'll look at other days' volume profiles. And what I see when I look at this is I see a fairly even distribution of price interest, price activity above that top blue line, and very little price interest below that blue line. So you can see almost all of the, well, in fact, 70% of all the trades were placed in that area there. So we call that the value area, and we focus on that red line there, which we call the point of control. Now we'll use that point of control to try and determine where price is going to go today. So bear in mind, we're interested in this. We talk about the three-line strategy. These are the three lines: the blue line there, the red line, and this second blue line. Those are the three lines that we talk about. Now, looking at where price is today, it's pretty close to yesterday's point of control. It's been hanging around the point of control for the last couple of hours. I also see here where we came into today's trading, price was in a bit of consolidation, and then it moved up. Now, strangely enough, that was what the 1 o'clock candle. That move normally occurs around about 2 a.m. UK time. I don't know why it was an hour earlier this time, but you see that significant move there. That seems to occur on a daily basis, but round about 2 o'clock. So it would normally have happened round about there. And in fact, there was a significant move at 2 o'clock, but it was in the opposite direction. So yeah, my theory is valid because there was a significant move downwards at 2 o'clock this morning, between 2 and 2:30. So that's something to bear in mind. I don't know if anybody's up and about at 2:30, but you could have got some pips out of that if you've been monitoring that. If you look at yesterday, look at that there, that's 2:15. There's a huge spike in price. It started at 2 o'clock. It continued on the 2:15 candle, and it went on to sort of 2:45, where that got to the top of that. So there's sort of confirmation of what I just said. 2 o'clock, there's normally a big move in price, and generally followed by reversal, as happened there.
Unfortunately, I've got to go. I've just had a phone call, so I'll catch you later.
Okay, you can catch the recording in the Ninja group.
Thanks, Richard.
Thanks a lot. Cheers now. Okay, so that is how you put the volume profile on if you're using a free version of TradingView. I'm going to take that off because I've got a paid version of TradingView, and there is one slight difference between the paid version and the free version. I've got the, it's called Session Volume Profile. I'm going to show you where to find that. If you look at the indicators panel up here, if you click on that, if I can remember, right, so yeah, so if you go to technicals in this panel here, go to technicals, you'll see volume profile here. If you click on that, there's a number of different volume profiles available. The one I've just shown you was a fixed range volume profile. That was where you actually define the range yourself, where I put it from the first candle of the day to the last candle of the day. You could use any fixed range volume. So you could use half a day or an entire week or whatever time period you wanted. You would choose the fixed range. We're going to work off this one here, which is a session volume profile. Now I'll show you that. I'm not going to click on it because I've already got it. But if you click on that session volume profile, it'll appear on your screen automatically. So I'm going to click on mine now. And the first difference you'll notice is that we not only get yesterday's session volume profile, but we've got one for today, and we've got one for previous days as well. Now I think currently I'm using Oanda broker feed, which only gives me volume profile back to the 20th of July. If you want more information, if you change the broker feed, go up there, see if this will work. You get all of these, you have the choice of all of these broker feeds. If I click on this one, Global Prime, I believe it will give me volume profiles going further back. You can see what's happening there. As I scroll back, it's offering me more. At the minute, it's offering me back to the 18th of July. I think if I stay on that, it'll offer me more. Maybe if I go on the daily and then back to the 15 minutes. No, strangely enough, it hasn't done that. But it certainly offered me more volume profiles going back slightly further than Oanda. And the reason I find that useful is, for instance, here on the 21st of July, you see this red line, that is a POC from the 21st of July, and that is still outstanding. So when we come to marking the chart up, we need to put a mark on there because that's what we call a previous point of control or an outstanding point of control, and that is going to eventually act as a magnet to price. Price is currently up here. It will have to come down at some point and take out that point of control. It's a bit like imbalance. It acts like a magnet to price. And then if you look above, there are no outstanding points of control above. There was one there, but that was taken out yesterday. And all of these others have been taken out as time has gone by, but there is an outstanding one from the 21st of July. So I've just been up to this point, I've just been looking for clues. I think what I'll do is I'll mark this off. I'll put a horizontal ray on that point there, just so that when we look at it in closer detail, we'll be able to see this. I'm going to make that a black line so I know it's different from everything else. And then I'm going to go back to reset the chart. Okay, so that black line that I've just marked on is down below here somewhere. If I just move that up. It's way down. It's it's so far I can't find. There it is. 1692, it was the point of interest that we just marked off, and we're currently at 1719, so it's not a huge difference. Let's just now talk about the setup for today. If I was thinking about trading gold today, I would be looking at these two blue lines, and I would call that my field of play. And technically, it's actually called the value area, the V70 value area. I call it my field of play. So I'm going to mark off that field of play in this area here. What I do is I get a rectangle and I put it on the blue line, and I drag it down to the second blue line, and then I extend it to the end of today. This is just a visual to help me focus on the field of play. So I'll drag that to 2200, 10 o'clock tonight, UK time. So that's my field of play. We're fortunate, or I'm fortunate, because I'm showing you this today, that price is actually within our field of play. So we can have a meaningful discussion today. The other thing I need to mark off is this point of control, yesterday's point of control. You can see how it's almost the same as today's point of control, but the one we're interested in mainly is yesterday's. So I'm going to put a horizontal ray on that. I can try and superimpose it on there. In fact, I'll do it slightly off and then zoom in to place it accurately. You can see that's my line that I've just put on. I need to put it on top of that red line. And what I do is I click on the padlock so that I can't move it accidentally. So that black line there, which I'm going to change out of habit, I always put that as a purple line. So that purple line is now the yesterday's point of control. And again, as a visual tool, I mark that. I've got a little template here. Go back. I'm going to mark it POC and in brackets target. So that's yesterday's POC, which is today's target. So using the three-line strategy, I would be looking to take buys or sells to the target line there. Now, ideally, I would want price to be either at this extreme at the top, taking a sell back down to the target, or for price to be at this extreme at the bottom, taking a buy up to the target. Now, I'm going to just try and demonstrate how price might react. At the minute, it's in consolidation. We need price to move away and then come back to the target. You see, when it went up there, that was 8 o'clock this morning. For some reason, quite a few of the pairs had a sharp rise at 8 this morning. I was watching the crossfire pairs. I'll just have a quick look. That one's not the best example. 7, no. Anyway, I'll come back to that. There was a real sharp increase. I actually got my 10 pips out of one of these spikes this morning. So I'm going to try and do this properly this time. I've tried it before and made a bit of a pig's ear of it, but I'm basically looking for price to get down to this extreme and then return to the target. The other alternative would be for price to start up at the top. An arrow, and for that movement there. Now, those are my first two potential trades when price decides to move away from where it is now. I'm looking at either a buy from the bottom up to the line or for a sell from the top down to the line. Now, just to put it in context, I'm going to measure that, and in the first case there, we will be looking at somewhere in the region of 34, 35 pips. And if we were looking at a buy, we'd be looking for somewhere in the region of 20 pips. So there's 20 pips in a buy to the target. There's 35 pips in a sell to the target when we're in a position to take those. But the second thing I need to talk about now is this thing that we often discuss, which is bounce or break. The reason I put this as my target is that price generally will bounce off that line. Because this line, if you remember where we got it from yesterday's peak of interest. So a lot of people were investing money in that particular price there, either as buyers or as sellers. In this case, the blue sector here is buyers, and then the gold or yellow sector is sellers. So there were actually more sellers placing orders there than there were buyers. But either way, this point of interest is, but this point of yesterday's point of control is going to behave like support and resistance line, support or resistance, depending on which direction you're coming from. And so price will tend to bounce off that line. It may bounce off for a long period, and I'll see if I can illustrate this. Put the arrow there. We might find that price will bounce off and go back to where it came from. Or it might bounce off temporarily and then break. So it could be sort of bounce and break, or it could be bounce and return. If we're coming from below, it might bounce off and return, or it might bounce off and then break. So there are options there. The other option is that it smashes straight through and contradicts everything I've just said, and goes all the way through. But that does not happen most of the time. Most of the time, what will happen is there'll be a bounce, and then it'll make its mind up, and if it wants to go through, it'll go through. But the reason I'm saying this is, if I was taking a trade towards that target, I would have my take profit just before or just on that target line, because I will be expecting I would be expecting price to bounce off it, even if only for a short period of time. I would then consider getting back into a trade only when price has shown its hand. So if price bounces off and then continues up in that direction, I would consider getting back in for another buy back up to this, and I would set this as my take profit line here. So I'm really expecting price to stay within this field of play and keep bouncing off the two extremes and returning to the target. That's the ideal scenario for the 3-line strategy. There are sort of extensions to the strategy that we can use if price isn't within our field of play. So if this price comes outside of our field of play, we can still take trades, but we have to take a slightly different view. And we will be looking at other, we're using this as our target because this is the main focus. This is yesterday's point of control. But we then need to look, if price goes outside that field of play, we need to look at other, what we call points of interest, other places on the chart that price might go to. Now, I'll just try and find one or two for you as examples. You see how price has been up to this point here. This was almost identical. There's obviously some resistance at that point. So this might be a point of interest if price decides to break out of the field of play and head upwards. That might be a point of interest. You could also possibly look at this scenario here where in this price drop, there was several pieces of imbalance. So where my cursor is now up to the top of that body of that candle, that's an area of imbalance. There's a very slight one there. Yeah, that's the only one. So maybe if we just put a little rectangle on there. So from that point down to that point, it'd help if I brought the rectangle with me. So from the top of that body to the top of that wick, there's an area of imbalance. So price may well, if it breaks out of this field of play, may well want to return up there. And if it did, I would set my take profit just below that line, just below that rectangle. Because it could well go up just short of that and bounce off. And equally, we could look for a point below, if it'll let me. That point there is a point of interest because there's obviously been some resistance there at that point. So just and look left. That's almost identical there. So there's some considerable resistance to price dropping below that point. So I would mark that off as a potential point of interest. Let's just do that. So if we take that line across there, I'm going to make that black. So we've got somewhere for price to go if it goes below our field of play. We've got somewhere for price to go if it goes above. And the more you analyze these charts, the more points of interest you can find. But those are the two closest. I don't see any other.
Richard, there is a bit of imbalance at the top of your field of play, just where your cursor is now.
Yeah,
just to the left.
Just spotted that one there. Just here.
That's it. Yeah.
Yeah. So yeah, there's a. We'll mark that off. It's just from the top of that body down to well, down to the top of that green candle there. So yeah, that's quite significant. So there's another area of imbalance, which I just dragged from that red candle there. So yeah, so price may well sort of bounce off that, or it may go through it and bounce off at the top line, and then it might head up there. So we've now got two reasons for price to go north and at least one reason for price to go south. And the further back you go, you can find more instances of points of resistance. Let's see if we can drag that up. Yeah, I'm not going to zoom in, but there's possibly some imbalance here in this steep rise, which we could mark out. I'm just for the purpose of today, and I'm looking for the first move today. If it moves outside if it moves below that line, I'll look for somewhere else, another point of interest. If it gets above these areas in balance, I'll look for something further north as well. But just for today's trading, I'm interested. Those are my points of interest. And what I normally do, I just get slightly clearer point there. You see price has actually just gone back to that first point of imbalance, which Chris pointed out just now. So it's actually gone. I should maybe make this a different color, and then we could differentiate. So I'll make that a sort of a pale green. So it's still within our field of play, but it's actually gone into the area of imbalance. So the theory works. We now got to wait and see, does it bounce off there and then start to come back to our point of control, or does it continue up to this second area of imbalance? I'm going to change the color of this one as well, and then we're not confusing everybody. Pale green, there we go. So we've got those are areas in balance. That's another point of interest from previous lows. So we just need to sit and wait and see, let price show its hand. It'll show its hand very soon, I guess, because it'll either continue north or it'll start to reverse. If it starts to reverse, I will be thinking about getting in for a sell back down to this line. So are there any questions at this stage before I look at something else?
I was just wondering if you could put the area of interest, the yellow box on yesterday, and just talk through what you did yesterday, Richard. Is that possible?
Talk through what I did on volume profile yesterday.
Yeah, so it looks like it actually went backwards and forwards a couple of times. I just wondered if you could talk through what that was like as it's finished.
Yeah, okay.
If that's all right with everyone else.
Yeah, well, what I'll do is I'll just move that out of sight, then it doesn't confuse us. But I'll keep coming back to it because I'm interested to see if it bounces. If it starts to make its way down, I might be interested in getting in I'll do it as a paper trade because I've already got my 10 pips for today. But so we just put that out of sight, and we'll talk about. So this would have been the previous day. So I need to move it down. So the field of play would have been between those two blue lines, and my point of control will be this red line here. So field of play from that top blue line to that bottom blue line, bear that in mind. My point of control would be this red line here. I'll just put that cursor in place. So that dotted or dashed line, that is where my cursor is. That's that would have been my target for yesterday. So you can see price started down here yesterday morning, well down here actually, but at 2:15 or 2 o'clock. Remember that time? I've mentioned it before. It took a steep rise and it went through my point of control. It didn't go to the edge of my field of play, but it went quite a way and then reversed and then came back to my point of control. This all happened before 4:30, so I wouldn't have caught either of those. It then went down towards the bottom because this is my field of play here. So it would have gone almost to the bottom, and then it came back up again. And there's my target, and you can see quite a steep rise starting at 7 a.m. went on till well, I would have if I'd got in that buy, I would have got out at that point. I would have stayed out until that next candle, which would have opened slightly clear of my point of control. So I would have taken one trade up to that point of control, and then a second trade once I was confident that price was increasing, going upwards, and I would want to see a gap between. I'll go in a little bit closer. Just going to have a quick look. No, it's still making its mind up. So that would have been my point of control where my cursor is now. I would have waited until that candle there, which is just clear of my point of control. So I would want to see a positive move before I would get in. I might not have got in until slightly higher. That candle opened and then sort of reversed a little bit. So I might have been hesitant, but I could have got in. But then I could have got in at this point here to take the trade back down to the point of control. Once again, I would get out of the point of control. I would wait until maybe this candle, which would have been well clear, and I would have taken the sell back down to the extreme of the field of play. And that would have been, I think, the end of my 3-line strategy for yesterday. But there was certainly 1, 2, 3, possibly 4 trades, two in each direction. Oh, let me just count those again. Yeah, I could have taken a buy up to the point of control. I could have taken a buy away from the point of control. I could have taken a sell back to the point of control, and then another sell away from the point of control. So basically four trading opportunities on this strategy just yesterday. Does that cover what you were looking for, Helen?
Yeah, thank you. I was just interested. And on that buy, which had gone past the one you would have taken after the point of control,
Yeah.
what would have been your lookout for? Because that hasn't gone to the top of your field of play, has it?
No, I would because it was such a wide field of play, I would probably have looked back to, so this is yesterday, so I would have looked back to the previous day, and I would have taken this volume profile into account.
Right. Yeah.
So you see how there was a lot more interest from round about where my cursor is now.
Yeah.
Going down, there was a lot more interest than there was above. So I could have. I mean, hindsight's a wonderful thing, but I would have possibly taken that as a point of resistance, because it was very low. If this is a peak, then that's a trough, isn't it? So yeah. You're in a trough there, and I might have taken that as a. And I know it's easy for me to say that because I've, we've got the chart there saying that's where it reversed, but that could have given me a clue. So that's
what I was going to ask, was what made you get out when you, obviously you've got that little doji candle, but I just wondered what made you get out when you did get out, or if what would have made you get out in those circumstances.
I think it again, it's just because we're talking with hindsight, it's really easy to say, oh, I would have got out at that point, but I would be bearing in mind that that's a huge distance from top to from that line to that line. It's a massive. We'll just quickly measure it. You're looking at over 70 pips, 72 pips. Is that right? Oh, yeah. I
get very confused with the pip counter on gold because mine measures completely differently.
Yeah, I just need to rethink what I just did there. That looks, that's actually 7.14 pips if you're measuring gold. Let me just reset the chart and just get it into context.
No, you're right first time, I think.
Yeah, but yeah, it looks more like 71. Yeah.
Mine's listing it as 722. Right. Sorry, 713.
Yeah.
So we're talking about a decimal point, a decimal place.
Yeah.
Yeah, that's confusing. I'll have a look at that, because what I often say is, if you're measuring gold, you move the decimal point. But in that case, that seemed a bit accurate. Anyway, I'll look at that later. But my concern would have been that if that's 70 pips, which I'm pretty sure it is, it's a big distance, and I wouldn't have set my take profit at 70 pips, that's for sure. I would have probably set it for 20. When I'm trading gold, I go for 20 pips rather than 10 pips, because my stop loss tends to be round about double what it would be if I was trading forex pairs. So I give it sufficient room to move. So I might have gone for 20 pip stop loss and 20 pip take profit on that trade, purely because if I was going for that as my take profit, there'd be much more chance of price reversing. So thinking about, Paul talks about it's easy to get 10 pips and 20 pips, or easy to get 10, 50. I bear that in mind as well. But there's a reason for that. Well, the reason that price reversed at that point was something to do with that lack of interest there.
I was going to say, you would also have had that previous reversal earlier in the day, didn't you?
Yes.
To the left of the trade you were in.
Yes, that's another good point. If I'm in this trade, I will be bearing that point in mind as well. So yeah, again, with hindsight, it's a lot easier. But my mantra would be, I'm not going to be greedy. I'm just going to go and get my pips. And I would very rarely go for more than 20 pips on gold. My lot size would be sufficient for that to be. And bear in mind, I'm looking at. That would be my second potential trade. I already would have made some pips on the rise up to the point of control anyway. So if I've been going for a second trade, I would certainly be way more cautious. And I would highlight these as potential trades, but I wouldn't have got in them because that's just sheer greed. But there are. What it's proven is that there are opportunities using this strategy. I'm just going to go back to current situation. We've broken through that area of imbalance that Chris pointed out just now. We're heading towards the second imbalance. I can't see any other sort of stumbling block in between. We look at the volume profile, that's all pretty evenly distributed in that area there. There's no peaks and troughs, no massive ones anyway. So it looks as if price might continue up to that point. Just if I was going to get in a trade there, I would set my take profit just below that area of imbalance, just to be safe. And if I've lost my measuring tools now. Let's just try and work out how many pips. We're on 724, so there's about 20 pips from where we are now to 1726, which is that line there. So there's 20 pips in that move. If I was going to get in a trade, I'd be happy with 20 pips on gold, as I say. We can sit and watch this if you like. It's making a very positive move, isn't it? But this scenario we're in right now is proving the balance the imbalance, I should say, is acting as a magnet. The other reason that we might look at that sort of, it's not quite a double top, but there's two points there of resistance. It might make its way all the way up there, or it could turn around at that area of imbalance, but it's looking likely. The other thing I would look at, where are we? I'll be looking at the multi-time frame stochastic, which is telling me that the 4 hour is right down at the bottom and everything else is getting very close to the top. If I can just enlarge that. There we go. So there we go. So we've enlarged the multi-time frame stochastic. The 4 hour it's been higher. It's come down, and it's ended up in the extreme at the bottom. So my gut feeling is that once these the 5, 15, and 30 and 1 hour, once they get above the red line into the extreme above, they will eventually come back down to join the 4 hour. No, doesn't mean it'll happen in the next 5 minutes, but eventually I think it's going to, these stochastics are going to turn around and come back down to join the 4 hour. In the meantime, there's potential, there's room for move upwards. We've got a bit of hesitation, which might, if I was in, I might be getting slightly worried. I might be thinking about getting out. What I would do is I would, before I decide to get out, I would look at the 5 minute chart. That's still moving upwards, then down to the 3 minutes. There we go, we've got a bit of a reversal. So I would keep my eye on that. And I'd be seriously thinking about getting out if I was in that. We don't have a 3 minute stochastic, but the 5 minute looks as if it's getting to the top and it might be running out of steam. So I'd be considering getting out at this point.
Richard,
Yeah.
good morning.
Morning.
Would you generally have that view on when you're in a trade, if it is wicking away and you've just shown exactly what you're thinking and it's going down to 3 and it's starting to go a bit red, and would you generally have that on any trade that you're in to sort of react?
That would be my, but I would look for confirmations. I've got one confirmation here that we're in the extreme, and for the reason I've just outlined, I think price is not necessarily right now, but it is sooner rather than later. It's going to reverse and go back to join the 4 hour at the bottom. It won't happen instantly, but it will happen. So I'll be looking at that as one reason to think about getting out, and then I would go down the time frames and see what's happening. You see, it was a pretty strong move, particularly that candle. That was we've had some reversals on the way up. Let me just, if I go back to the 15 minute chart, we had a reasonably strong candle there, quite a strong candle there, quite a strong candle there, but it's just starting to show signs of maybe running out of steam. It's a bit more wicky than the previous candles, both to the top and the bottom, and it might just be running out of steam. As I say, look at this here, the AOMACD. If I put my, I've lost my drawing tool, but anyway, if you put a line on the 0 there, roughly, price has gone quite steeply above the 0 line, so, and the green line is still on top, and we've still got a green, so we're still trending upwards, but looking like it might well, as I say, it might be running out of steam. So I'd be really cautious. I'd be thinking about 5 minute, what's happening on the 5 minute. We see we've got a bit of a red candle. 3 minutes, it'll be red. It has been red, and just don't normally go down to the 1 minute because that's a bit scary, but you can see what's happening. It is positive running out of steam. So my view will be time to get out. If it goes back in an upward trend again, I might consider getting back in, but we're pretty close to that. So my room to maneuver is not really sufficient, I don't think, for another trade. So yeah, I would be, if I was in that trade, I'd be thinking seriously about getting out. There we see on the 5 minute, we've got a red candle. And my view would be, well, you know, there's always another trade. Get out without a great deal of drawdown and consider getting back in again when it makes a more positive move.
What's your indicator saying just now with that? Is it-
Still up. Let's see if I can get the Ninja Matrix. I'm on the 5 minute time frame, so the 30 minute is okay. Right, the Ninja Matrix is saying we're going in for a sell, or we're heading. There's a Ninja Matrix down signal there. Ninjacator's still saying up, but I would be out by now. It's definitely moving downwards. So having said that area of imbalance would be my target, you know, if I'm in a position to be able to sit and watch the charts, I would get out before it takes me too far down. I will get out with some profit rather than getting out with no profit. It's definitely coming downwards, isn't it? You've got the 5 moving average is still on the up. The 13 moving average is still on the up. There's quite a considerable gap, but you know the proof is in the pudding, and the price is actually going down. So I wouldn't wait. I wouldn't wait any longer. I would certainly be out by now. Right, well, I'm coming up to my allotted hour. If there are any final questions, Paul's on today he's starting at half an hour early today, starting at 1 o'clock, so he can catch the Crossfire trade. Brian's on later tonight. I'm doing a one-off tomorrow because David's on holiday. Well, he's taking a break. I've had quite a bit of response to my question last night where I asked if anybody would be interested if I did a session on back testing. So 8:30 tomorrow, I'm doing a one-off back testing session just to show how I back test. It's not necessarily the only way, but we've had quite a few positive responses, so I'm going to do that. So thanks for jumping on. I'm going to stop sharing. I'm going to stop recording, and I'll see you tomorrow at 8:30.
Thanks, Richard.
Cheers then.
Thank you.
Thank you, Richard.
Cheers now.
Bye.
Bye.